All right, welcome back. You're watching The Money Show on ET Now. For all new investors in the market, especially actually for all new investors in the market, step one, of course, is choosing a good broking firm. It's extremely important to do that, and all the more why, because we do know what happened last year with respect to the entire Carvey fiasco. Secondly, the recent rise that we've been witnessing, especially in the last couple of years, of something called as zero brokerage or discount brokerage model. Should you blindly opt for that? And yes, of course, I understand it may sound like a very tempting proposition, especially when the broking firm tells you that, look, you don't need to pay anything at all to me for brokerages, or even if you do, it's an extremely small amount, and you can use my platform freely to trade in shares, most of them, of course, on a delivery basis. But are there any risks involved? What are the ABCs of choosing a good broking firm? So I have with me a renowned, experienced and noted trader, Kunal Bothra, joining in. Kunal, many thanks for joining us. You have a lot of experience dealing with all of these different broking platforms. I'm sure you have tried your hand using more than one. So tell us, how has been your experience in this last more than a decade of trading that you've had?
So good evening, Mobina. Thank you so much for having me on the show. So yes, I think this model of discount brokerage and zero brokerage, I think has just about gotten a lot of trend. I have not traded all the platforms, but yes, many of my clients, whether it's the trading clients or whether it's the advisory clients, they they have definitely subscribed to many of these models, and they've shared their pros and cons with me as well. So as you rightly mentioned, yes, zero brokerage account is something which is gaining a lot of traction. I think what's very important is, one has to look at, what is the feature of the zero broking account or zero brokerage, funda. So I think that concept is very, very important. Now, generally and typically we look at, two kind of brokerages. One is the full service brokers, which we typically call as someone who has a research and advisory desk, someone which offers a lot of platforms, and services, in the brokers. And the second platform is the discounted brokerages, which I think in the last decade, I think from 2010, if I'm not wrong, when Zerodha started operations, I think from there on itself, is where this discount brokerage model started, and slowly and steadily it started with it gained traction to a zero brokerage account. I think now a lot of the other brokerages, now a lot of the full service brokers are now shifting to this zero brokerage model. So I think that's the latest trend which has been happening in the market so far, and I think it's good for the investors. So I think what this zero brokerage funda does, it reduces a lot of burden of cost of brokerages and the other charges. I think on one of your screens which you mentioned, on all of those charges, the stamp duty charges, the SEBI charges, the turnover rate charges, and I think there are some 8 or 9 charges, if I'm not wrong, which are getting included in per transaction. So I think that gets eased a lot with this. So I think it's a very helpful step. And it invites a lot of participants and traders into the markets as well. So yes, I believe that zero brokerage account is something which is very new, which is very innovative for our markets, and something which I believe has a lot of positives.
It's new, it's innovative, and yeah, it cuts down your cost drastically because, and I'm sure many people are aware that you get charged a GST as well on your transaction. The GST is at the rate of 18% of your brokerage fee as well as transaction fee. So now imagine what happens when your brokerage fee goes down to zero. Your GST as well obviously is cut down by that amount. Transaction fee of course stays, but the GST as well is cut down quite significantly. So you're seeing a massive savings in other costs. But Kunal, is it perhaps too good to be true? We have skeptics as well, right? When someone offers you something for free, you do have this little bit of skepticism that creeps into your mind. Is that justified? And I all the more ask you this question because unfortunately in the last 1.5 to 2 years, Kunal, we've seen a lot of entities in different institutions, in banks, in broking as well, unfortunately with the Carvey incident coming to light, leading to people's faith as well in those systems really wavering a little bit. So would you say that something like this is absolutely risk-free?
No, I think nothing is risk-free in this market. I think even trading, with shares is, of course, is is entailed with a lot of risk, Mubina. So I think yes, you've pointed out one of the very important and forthright questions as well, that what are the kind of risks which are involved and what are the benefits. Now, whether just by the the facet of it, that whether the zero brokerage account or the zero brokerage concept, it does it invite or does it have any hidden charges or applications to its. So I think what I have seen across various platforms, so whether it's the top broking or the top discount brokers like Zerodha, then you have Upstocks and 5paisa and so many of these other, I think there are some 7 or 8 discount brokers which are there in India. So I think on major of these platforms, when I look at the distribution or the segregation, the zero brokerage happens, at almost a 10. So, there are two types of traders in the market. One is an investor, the other is an intraday or a short-term trader, someone who trades probably in the F&O segment. Now, the business model segregation generally has been that 10% of the clients are the ones who trade on an average, are the ones who take delivery, or the ones who take shares or buy or sell shares from a longer term view, and the 90% of the revenue, or almost 90% of the revenue, gets generated from the trading account. Now, what discount brokerage is, or what the discount brokerage offers in terms of zero brokerage, is that it tries to zero down the cost of investing. So if you take delivery, for example, then the cost reduces to zero brokerages. Now, the benefit of this is, of course, that the cost reduces, but the risks involved, could be that you have to have, you have to go with a trusted brand. I think, as you rightly mentioned, Carvey was one of the major fiascos which happened, I think, start of 2020 in the first quarter, and I think from there on it left a lot of dent to the broking fraternity. So I think in that regards, yes, that's one of the bigger risks which are involved. But then there are a lot of other positives. So when I look at many of these other discount brokerage models, these brokerages houses, they offer you a lot of other softwares. Now, for example, there are some charting softwares which a certain discount broker offers. So it's about getting addicted towards a platform or getting addicted towards one particular style of service which I think a trader requires. So on one hand, yes, the free the zero discount brokerage is a way to invite or the clients, or sort of give them a offer as such. But on the other hand, the way in which these discount brokers, they generally tend to earn revenue is by offering a lot of other ancillary services. So whether it's trying to form your own portfolio, picking up the research and services which are getting provided by these platforms, etc. So softwares which are also getting provided, and various higher level applications which are also there. So I think the revenue gets generated over there, but the discount brokerage model or the zero brokerage model which is there, I think it's there for a genuine reason.
All right. So go with a trusted brand. Essentially, it's extremely important to understand that you do that. Don't go for the smaller guys or the more lesser known guys. And yeah, the idea really behind these broking firms as well is to sort of lure you in. First, you give that offer of a zero broking fee, and then of course you go for that. Then you use that platform, and now of course all of them on your mobile phone. So it's extremely simple as well. The UI of these apps is great, so you sort of get hooked onto it, and then you don't want to go anywhere else. You're comfortable using an app, and that's really the idea as well of doing so. Going with a trusted brand could sort of at least eliminate any other risk that would be involved. Kunal, what would be the business model really? I want to understand this question, because tomorrow when I am hooked on to one of these apps and I'm busy with my trading, suddenly I'll get a notification from the app that's saying that, okay, listen, I know we said we are zero brokerage, but now I think for delivery we are going to charge maybe a flat fee or a percentage wise fee, which is the most commonly charged broker fee. How did we do it before, and what's causing these guys to produce a lucrative model with zero broking fees?
That's what I think, as I mentioned earlier, Mubina, so it's a very pertinent question. And I mentioned earlier that, the business model for traders, so when you look at the brokerage houses, and you try and segregate the trades, which are the trades, or how much is the composition of the short term or the intraday trades, and the composition of the F&O trades, which again is very, something which is a very high, turnover, oriented segment for the, markets, as compared to the guys who take deliveries and, someone who buy for long term. So, as you see the markets going up higher, if the markets are gaining traction, there is a lot of new participants. One is from the retail side, from the HNI side, who enter into the market, and as well there is a lot of turnover and trading which happens now for the discount brokerages. What is more important, or what is most revenue generating model, is on the trading aspect. So whether it's the intraday trades, some of the broking houses, I think just recently, I think last couple of weeks, I think if I'm not wrong, have also offered some zero brokerage model on few specific intraday trades on the cash side, and they've reduced the fee on the F&O side per order. So there are those tweaks and changes which have happened to the zero brokerage funda. But I think all in all, the major composition of a revenue for a brokerage houses happens from the short-term trades, or from the intraday trades, or from the F&O trades. I think which is why they are letting go of the fee on the investment sides, or the ones which are on the delivery side, so they can invite a lot of clients and customers, and they can get hooked on to the platform. And once you're getting hooked on, once you're getting addicted to the certain set of series of platform, and trading is a business, or trading is a line which requires a lot of introspection, lot of research as such. So you would want to be hooked on to the tools and to the equipments as such, which tries to give you more quality kind of research. So I think no one has any doubt as such trying to pay for quality. So I think in that regards, someone who's probably hooked on to traders, or these kind of platforms, they are ready to pay the extra ancillary charges. So I think the revenue model is, or the idea of the revenue model is quite brilliant as such, because they're letting go of one arm of the revenue, but the major chunk of the revenue which happens actually from the short-term trading aspect.
Okay. All right. Well, Kunal, I'll let you go on that note. Thanks so much. Actually, before I let you go, Kunal, you know what? Let me squeeze in one more question. For everybody who's, just sort of entering the world of share markets, who just want to, sort of enter the world of share trading, they are in the midst of right now choosing their broking app. So the first point, of course, which you mentioned as well in your previous answer, was that it has to be a good, renowned brand. What would be the other points you would like to look at for those people who want to become expert traders like you?
See, there are a lot of points to look at. One of course is that your money has to be safe. So in markets we say that the return of capital is more important than the return on capital. So assuming if you're putting a margin into a certain set of a broker, or you're putting your your amount over there, then that amount has to be safe enough. So more importantly, I think I'm highlighting this point because of what happened in the month of February and March with Kavi. So I think that's one important portion to look at. The other, I think there are many traders who generally enter into the market, getting hooked on to those small brokerage fees. So I think all of those are one part of the segment which you look at. So someone who is probably a very large kind of a trader. So for example, someone who trades in volumes of lakhs and crores, I think for them the reduction in the amount of brokerage is something which is very, very important. But then on top of all of these layers, so the charges, the brand, etc., is the amount of research which is put across into trying to pick up the stock. So most of the time when traders, or when new participants who enter into the market, they have very less amount of knowledge. Now when you ask for some expert advice, the advice has to be of a higher quality. So I think it's more important to try and go with a broker, whether it's a discount broker who offers maybe an ancillary research services, or go with a full service broker. I think what's more important and more focused has to be the amount of research, or the quality of research which you're getting from there. So there are a lot of important verticals. Each individual has different set of criteria, giving more importance to. Someone can give more importance to brokerage, someone can give more importance to the kind of service, or the online platform which is attached, or someone can give more search or quality towards the research which is involved. So I think it depends on individual to individual, but you have to have more focus towards all of these verticals which are getting provided by the brokerage houses.
All right, so Kunal, we let you go on that note. Many thanks for joining us and giving us your words of wisdom on something that's a very basic of share investing. before doing anything else. In fact, this is the first step you do, and that is choosing a broking firm, opening your account with that broking firm. And yeah, it's a great line. Return of capital sometimes is more important than return on capital, and you can be assured of that aspect at least when you choose a good trusted broking firm, which Kunal as well has highlighted. All right, well, let's move on now and, get on board an important news. If you have a policy from Hdfc Ergo General Insurance, well, there's an update for all of you. Hdfc Ergo General recently announced that it has completed its merger with Hdfc Ergo Health Insurance. They have received the approval as well from the insurance regulator. Remember that Hdfc Ergo is actually now, after this merger, it's become the second largest private insurer in the whole general insurance space. So if you had maybe an accident insurance policy from Hdfc Ergo General, or for that matter, if you are a health insurance policy holder with Hdfc Ergo Health, well, if you're a health insurance policy holder, obviously there's not much that there's not going to be much that will change for you, but the management has very clearly said that there's going to be no impact. The policy benefits will continue as it is. Even the renewability of the policy will continue. And in general, usually these mergers really don't impact the policy holders, as the insurer has to honor the contract that has already been entered into with the policy holder. We have had, the Ritesh Kumar, who's the MD and CEO as well of Hdfc Ergo, saying very categorically that there's going to be absolutely no changes in the existing policy terms and the conditions and the benefits offered. All benefits accrued thus far for all you policy holders will continue to be available. Furthermore, there will be absolutely no change in the premium as well for these policies. So just an update, there's no need really to start thinking whether there are going to be changes for you. There are absolutely no changes. In fact, you will now be a part of the second largest private insurance company in India. And on that note, we'll take a very short break on the show. We'll be back with more.